This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, this is Bloomberg Businessweek Daily. Tim is off today. I'm Carol Massar, and lucky for us, Emily Grafeo's in the house.
Yeah, thank you for having me.
I always love to have you with us. And we got a lot going on. We're going to do some interesting things, some deep dives, but it's coming on a day where I feel like the market giveth and the market taketh away.
Yeah, we got a pretty significant sell-off on Wall Street, Carol. If we look at tech stocks, the NASDAQ 100 down 2%. If you actually go into the S&P 500, the breadth is pretty good. More advancers than decliners.
Yeah.
But that's just showing kind of how much power tech has over the indexes.
And I've got to say, a quick look at the top gainers in the S&P. It's not like the tickers are household tickers to me. It's not the names that we maybe always see, and it's certainly not the chip names today because we're seeing the semis pull back. All right, we're going to get into the trade. We did also have the president saying that the U.S. must respond to Iranian shooting of a U.S. Apache helicopter, so we continue to watch the Middle East situation. So what do we do in this big hour? We're going to talk about big tech because we're going to talk about Apple because Mark Gurman is going to join us. He's going to have a recap. I mean, I have to say, everybody we talked to yesterday, the Apple Worldwide Developers Conference, Mark really set the stage for us. We kind of knew what to expect, but we want to talk to him specifically about what we heard and what it all means.
And we're going to do more on AI, Carol. We also have former U.S. Secretary of Commerce Gina Raimondo on AI's impact on jobs.
Yeah, and she's been following this, commenting on it on social, writing some opinion pieces, so looking forward to what she has to say. We have the CEO at Philips North America on how healthcare execs are discovering that AI isn't just about cost savings. And then we're going to kind of tie it all together and talk about the markets.
Yeah, we're going to have Citi Wealth's head of portfolio construction and analytics, who kind of puts all the pieces together in a portfolio, to stop by.
And I'm curious what she sees as maybe the model portfolio in this environment. First up, though, let's get a check on that trading day. Take a look at breadth. What are the movers? Here is Charlie Pellet.
All right, I thank you very much indeed. We got two key cross currents right now. You hit on both these themes. Middle Eastern headlines, also a rout in chip makers. Right to the numbers. We've got the S&P 500 index off session lows, but still trading down by almost 0.9%, down 64 right now. Dow Industrials down 73 on the Dow. That is a decline of 0.1%. NASDAQ, though, tech names hard hit today. NASDAQ down 447, a drop there of 1.7%. The NASDAQ 100 index down 611 points for that index, a decline right now of 2.1%. The Bloomberg Mag 7 index down 1.4%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down 4.5%. All of this with a VIX on Middle Eastern tensions just above 20. A couple of hours ago it was as high as 23. The 10-year, 4.52%. The 2-year, 4.12%. And the 30-year, 5.00%. Gold down 1.5%, 42.63 the ounce. Crude, major story, down 3.5%, just above $88 a barrel now on WTI. Barrel of Brent 91.44. It is down by almost 3%. President Trump saying the U.S. must respond after blaming Iran for shooting down an American military helicopter off of Oman. Both pilots are said to be okay. And again, let's recap here because we got the SOX trading down. It is down 4.6% among some of the tech names, among some of the chip stocks that are declining. Marvell down 11%, Qualcomm down 8.5%, ARM Holdings, it is down by 8.9%, NVIDIA down by 1.7%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Emily and Carol, that is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Want to go back to Apple. We've talked about it a lot yesterday. The company said it isn't able to launch Siri AI, its redesigned digital assistant, on iPhones, Apple Watches, or iPads in the European Union, marking the company's latest standoff with the continent's antitrust watchdog. And yesterday we talked so much about what Apple had to do in that Worldwide Developers Conference. They unveiled the redesigned smarter Siri. They can answer questions by drawing from what's on users' screens, as well as their messages, emails, and photos. There's a lot going on here. I do want to point out, though, the stock, Emily, down about 6% in the past 2 trading days. So we knew we wanted to talk to our Mark Gurman. So let's head to our Bloomberg LA bureau. He is what I like to call our Apple whisperer and clairvoyant. He is Bloomberg News managing editor for global consumer tech. Mark, it is so good to be checking in with you. I have to say, everyone on our team yesterday reminded us how you really called it when it came to Apple's news yesterday. For you, though, as they laid out the specifics, probably a lot of it you knew, what was maybe new? What was the reveal that you think was interesting and that our audience need to take note of?
My big takeaway is that Apple has just reset its AI strategy, its Siri strategy, and its underlying software platforms because they have a blockbuster next 3 years of new hardware products that they need to get right. And what you've seen from Apple lately is that the gate to some of their hardware products coming out on time, being successful, working as advertised, has been AI and has been the underlying operating systems. And so for the foldable iPhone, AirPods with cameras, 3 smart home devices, new iPads and touchscreen Macs to come out and sell at their peak, it needs to work properly, and they need to get the software and AI story in shape, and they did just that. Obviously, they can't come out and say, because of their culture, that this is why they're doing that. But from what I'm telling you is that this is all about enabling this next generation suite of hardware under incoming CEO John Ternus.
So are they finally caught up in AI compared to the other big tech companies? Because as Carol had mentioned, the stock is lower today.
No, they're where they should have been 2 years ago. They're not caught up in any shape or form. And I think that's why you've seen the stock go down. Usually the stock trades higher because of whiz-bang features, new demos, things you've seen from Google over the past several weeks. You saw a very strong Google I/O conference in terms of new AI functionality. But what we also saw is Apple roll out AI in a way that is for mass consumers. Their new LLM, their new on-device Siri technology, also hitting to the cloud, is effective. This is what mass consumers are going to use. Don't forget, 1/3 of the world is using these Apple products. And so I think their approach that they're taking is super smart for the mass consumer. But at the same time, I think if Apple was capable of rolling out these whiz-bang features and developer tools, things like Codex, things like OpenClaw, they would do just that. And they will probably get there eventually. Obviously, they got a helping hand from Google, Anthropic, and OpenAI this time around. But I do think they are in a very fair place for consumer expectations today. And their brand is super strong. And so people are going to keep buying the product. So I think they're in a decent place, an adequate place, not in an incredible place, but an adequate place. Whereas 2 days ago, they were in a pretty subpar state.
All right, so decent place for consumers. I mean, the stock was up just about 8.5% last year. It's, just pulling it up on the Bloomberg, up about 6.5% this year, Mark. I mean, it's not on par with some of the other high flyers, certainly in the tech space. So what will it take for investors to get more impressed? What do we need to see from Apple, and maybe how long does it take for it to get there?
I think investors are going to need to understand that for the next few years, Apple's not going to be a AI winner in terms of the way that they think about AI winners today. They're going to need to recalculate their investment thesis around, is the Apple product story, the overall cohesive story, strong? Are the new hardware products industry leading? And don't forget, Apple's always been a hardware company at its core. 80% of the revenue is from the hardware, the other 20% services. And they've been doing good in services and they've been doing good in hardware, but the hardware needs to be in a place where it's actually excellent again. And my hope as a consumer is that these new software features are going to try to push the hardware into a great place, an excellent place. And so we'll see if that happens.
And that includes, you did have another story out about the iOS 27 overhaul and all these related software updates, what it says about the foldable phone from Apple. So what did you glean from all of that?
Yeah, this 3-year roadmap of major new hardware products. The first one is the foldable phone. You'll see the new CEO introduce that in early September. Uh, the new iOS obviously is going to run on this phone, so it's chock full of hints about the upcoming device. I'm pretty excited for it. It's going to have a widescreen display, excellent reliability and durability. So I think it's going to be a pretty compelling product.
Mark, before we let you go, we do want to get your reaction to this Apple news saying that under EU regulators' extreme interpretation of the Block Digital Markets Act. What do you make of just the regulation in Europe and how much it's going to stifle Apple's growth projections here?
I don't like what the EU is doing at all. Let's take Apple and growth and Apple's a company aside. If I'm a consumer in the EU, someone like me who loves tech, wants to try out these new features, wants these breakthrough new products and software enhancements, I'm upset with the EU because I just want this stuff and I want my Apple ecosystem to work as advertised as it's supposed to work. If I'm a developer, which the EU said they're putting these rules in place to protect competitors, to protect third-party app makers, I'm really angry because if I'm a developer in the EU, I'm not able to introduce new AI apps, all these features that take advantage of the new frameworks, these new platforms. And I want to be able to do that in order to make money for my small app business. So I'm not really sure who the EU is helping here.
All right. Good stuff. As always, so glad you could jump on with us. Mark Gurman, thank you so much. Always appreciate it. He is Bloomberg News Managing Editor for Global Consumer Tech. And as we mentioned, we've got Apple now down for 2 days in a row. So some selling despite all of this news. All right. Let's get to today's overall trade. We've seen rotation. We've seen investors bail from some of those richly priced tech names in favor of more economically sensitive industries and dragging down the S&P while lifting the majority of its companies, which you pointed out. You look at the breadth. It's there today. Yeah,
there's almost, I think, 350 advancers in the S&P 500 today. And again, this is on a day when the S&P's down a lot right now. I mean, 0.8%. That's a significant sell-off.
All right, so I'm curious what our next guest has to say. Olaolu Aganga, she is head of portfolio construction and analytics over at Citi Wealth, is back with us. Good to have you here. How are you?
Really good. Thank you so much. Despite today's little bit of a reprieve, actually pretty good.
All right. Well, so pretty good about the market outlook?
Pretty good about the market outlook. Friday kicked off the break of the 9-week upstreak for the S&P, right? It's a little bit of a pullback. Our job...
That's a good thing after such a run?
It's a good thing, frankly. Part of our job is to be able to put all of the pieces together, right? Because it's a lot of information, a lot of headlines. Now, within the CIO office, as we're thinking through all of that, we've aggregated everything that we're debating around 3 core areas. And the first is growth and the resilience in growth. Despite the conflict in the Middle East, we're crossed 100 days, right? So there are a lot of factors, and I'll talk about that in a second, that are showing resilience. The second area is inflation. We're seeing the data come out. We've got CPI tomorrow, but inflation taking us back to 2023 levels just about and broadening a little bit and what that implication means potentially for rates. And then the last, of course, you can't hide the mega cap IPOs that are coming, right? So those are some of the 3 things for us as we think of asset allocation and we've been debating. So if I was just to double click on the growth aspect and resilience.
Is that the most important one, you think?
It's the most important one. And the gentleman that came before me was talking about Europe. Now, PMI data, global PMI data has been indicating expansion. Levels above 50 is expansionary. And most of the major economies, with the exception of Europe, surprise, surprise, unfortunately, has been indicating growth. So that's a positive. The jobs numbers, Friday, 172,000 jobs that were added. That was great. It was strong. The trend in the average over the last 3 months is actually close to 200,000. That's
strong.
That's strong. And then, yes, consumer sentiment, and we have to distinguish between sentiment data that's been ticking down and been weak and negative with consumer confidence and consumer spending. Consumers are still spending, right? They're still spending despite what we're seeing here. So those 3 aspects, we had deficit data come out this morning, right? So the deficit narrowed. So we're looking at all of those different pieces, and then you wrap it up with the end of Q1 earnings, 27% year-over-year growth, right? So take a step back. We didn't see 27% year-over-year growth walking into the earnings season, but every company was talking about AI, their strategy around AI, how that's affecting their profitability, helping really their profitability or their productivity, and how they're thinking about it going forward. Prevalent across the board, right? So again, 27% year-over-year growth. That's good.
We're going to talk with the former U.S. Commerce Secretary, Gina Raimondo, about AI, though, in jobs, because there's some nervousness. But we'll talk about that later. I know Emily wants to jump in.
Yeah, well, I mean, so this setup, I'm wondering, do you think that this is just a lot of good momentum then for a company that maybe wants to IPO at a valuation of more than $1 trillion? Or does this mean that people are going to be tapped out? There's not really any kind of juice left in that trade?
So there are a number of aspects around that. If we think of even the clients on our platform, we see a lot of folks actually holding on to cash, right? If you were to look at money flows and money market flows.
We've heard that a lot.
Yeah, that's
still
gone
holding
up.
on to cash.
They're still holding on to cash despite the fact that rates have come down, maybe not to pre-COVID levels, but rates have come down, still elevated levels of cash. So they've got money to deploy. Even with this pullback, we've got money to deploy. Now, for these mega cap IPOs, to your point, the way we think about them, it's not just from an investment standpoint, but like how could that affect broader market participation or potential index inclusion, right? So if they were to come into an index, how would we really start thinking about that? Now, we've done a little bit of work there. Frankly, a lot of the index inclusion and free float rules and profitability, right? So mega cap IPOs, are they profitable today? No. So that's a little bit of a hurdle. So we don't see that really having a big, broad impact. Like the headlines are great. It's some of the largest IPOs we've seen ever. But from a broader market impact, especially with regards to index inclusion, we don't see it.
It makes me, though, like I want to see what happens 3 months, 6 months after these IPOs and like how the stock is trading. I want to just counter if I can. We have a story on the terminal about B of A warning it's time to take profits as red flags multiply. And they say some 70% of bear market signals have recently triggered in line with the average observed during prior market peaks. This is according to their strategists. They talk about the S&P statistically expensive on 17 of 20 metrics and trades rich versus its tech bubble metrics on 8. They talk about measures including consumer confidence data, growth expectations, M&A scores, credit stress, as well as tightening conditions. I could go on and on and on. How do you counter that?
I mean, I've listed just a handful of metrics that we look at, but broadly speaking, if you were to take a step back, for valuations and equity valuations, price to earnings, the earnings have grown, right? So like actually, if you were to look at valuation of that metric, we've seen a bit of a dip because the denominator has expanded. And the denominator expansion and the earnings growth expansion, again, 27% year-over-year growth, we didn't see coming. We actually think, yes, equities are not cheap, but if you were to look at it on that metric, it's actually pretty good. And then holistically, as you start thinking of what are you buying? You are buying forward earnings. Now, it doesn't mean that the whole picture is rosy, right? Like there's still inflation.
Because you cover credit, Emily. You see some of the concerns, the cracks, right? And follow it every day.
And that actually is different. The valuations from a credit perspective is high. So while absolute yields are elevated, credit spreads are at actually multi-year tights.
Right.
So from our perspective, we've made adjustments in our portfolios. Like we've mentioned, we've trimmed credit spreads. We've gone shorter duration. Inflation is still there. So credit spreads we don't think is an attractive risk reward, but equities we still do, and tech adjacent AI, just keep expanding from there.
All right, we're going to have to leave it there. Thank you so much.
No, thank you for having me.
Always love having you come in. Olaolu Aganga, she's head of portfolio construction and analytics over at Citi Wealth, joining Emily and me right here in studio. Hey, coming up next, we're going to get into, we said we were going to talk about AI, right?
Yeah, we have a big AI show. We're going to talk about...
It's out there a lot.
Yeah, we're going to talk about the labor force too, Carol, and how AI is impacting. Is it ultimately going to be good or bad for the labor market?
I feel like it's just so early, we don't know, but it feels a little nervous. We're also going to talk about AI in healthcare. We've got a study out from the folks over at Philips, how AI isn't just about cost savings. Jeff DiLullo, he is a CEO at Philips North America. He's going to join Emily and me when we come back on Bloomberg Businessweek Daily. Folks, stick around. We're just getting started on this Tuesday.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Chips and geopolitics. Those are the two catalysts for today's sell-off. The Dow, the S&P, NASDAQ were off session lows, but still very much in the red. President Trump, meanwhile, says the U.S. must respond after blaming Iran for shooting down an American military helicopter off Oman. The president's comments came hours after his claim that an agreement to halt the fighting was close. S&P now at 73.53. The S&P down 52. That is a drop of 0.7%. Dow Industrials now little change, down under 0.1%, down 42 points. But tech names hard hit today. NASDAQ down 1.5%. The NASDAQ 100 index down 1.8%. All of this with the SOX down 3.8%. That, of course, the Philadelphia Stock Exchange Semiconductor Index. The VIX back below 20 a couple of hours ago, was above 23. The 10-year 4.53%, the 2-year 4.12%, and the 30-year 5.01%. Gold at $42.70 the ounce, down 1.4%. West Texas Intermediate crude 88.30 a barrel, down 3.3%. Barrel of Brent 91.54, down now by 2.9%. Bank of America's trading desk says it is seeing momentum gaining steam, with revenue trending higher than the 15% increase that the bank forecast last month. Today, Bank of America shares, they're up now by roughly 1.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Emily and Carol, that's a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet. Just want to point out Fannie Mae shares extending a drop as much as almost 6% down on the day. We're looking for some reasons why. Don't see anything specific, but we're going to continue monitoring and bring you any more context as we know it. In the meantime, we want to continue with AI. Phillips' 11th Annual Future Health Index, it is out now. It examines how AI is already changing the way clinicians work, how they deliver care and manage pressure across the healthcare system. Now, among its findings, how healthcare executives are discovering that AI just isn't about cost savings. So let's get into it. Jeff DiLullo is CEO at Philips North America. It is the largest regional market and division of the Dutch health tech company giant Philips NV. Those ADRs trade in the U.S. They're down about 3% year to date. As we said, Jeff joins us here in studio. Welcome, welcome. How are you?
I'm wonderful. Thanks for having me.
Well, it's good to have you here. We do feel like we are spending so much time talking about AI. It's just coming into every aspect of our world. Tell us, though, about the study that you guys do. It is your 11th annual. What it's all about, who you talk to, and what are some of the findings? Well,
thank you for having me, Carol. I want to set the table here very quickly, because what I talk to healthcare CEOs on a weekly basis, and the same three things always are putting pressure on that system, as you said. They're delivering more care longer to people that are living longer, and that complexity of that care is increasing. So that's actually putting stress on the system. They have staff shortages, which continue to persist and got worse post-pandemic. Mm-hmm. And then the cost of delivering that care is actually continuing to go up. So all those three things are really putting stress on the system. But the opportunity that we see is AI in healthcare is becoming quite of age, where a year ago in this study, roughly 20,000 people, 2,000 clinicians, 18,000 patients. And what we saw from year to year mm-hmm. is they've gone from experimenting and piloting in AI applications to much more broad adoption and impact. Impact in time back they can spend with patients, impact in quality diagnosis, and impact in well-being. And they've been very clear about that in the study.
What do those AI applications in healthcare actually look like in practice?
So I'll give you a simple example that everybody can relate to. So the average physician in this study said that they're getting 5 more patients per week because of tools that they're deploying in their practice. So when I go to my general practitioner, I get maybe 10 or 15 minutes if I'm lucky with him and most of that time it's sitting on the keyboard asking me questions, right? What we're seeing is they're getting the chance to ambient speak what they're talking, that dialogue. It's translating it into the medical record. So what they're doing is they're spending time looking you in the eye, asking you more questions. That's better for more patients they can see because they're spending quality time in the room, or maybe even more patients like we're seeing. Do doctors feel, or medical professionals, Jeff, feel that we are just barely scratching the surface when it comes to AI in healthcare? Yeah, a prudent approach is good because you want to make sure that you have responsible AI deployment, and we're hugely, as a tech company, we want to make sure it's responsible. But I actually think we're the scraps at the table and the feast is yet to come. What do you think that feast looks like? So take the life of a radiologist. So the average radiologist has to work all day, sees patients, maybe do procedures. Then they take all these studies, 200 studies home at night, and they have to go through these studies. That's pajama time, right? That's long days for radiologists.
Mm-hmm. Which makes me always nervous as a radiologist who might be tired.
Exactly.
And reading yeah.
Exactly. So you have these long days, they're stressful.
And I know there's great doctors out there, so I don't want to diss this.
No, but the system is not meant for them to have balance. And so what we're seeing is AI in the pathway. The whole, if you don't think of AI as a bunch of point solutions that do discrete things, in healthcare, it has to fit to the radiologist. Mm-hmm. It has to fit into their workflow. So I can scan somebody with great AI much faster. I get it into their workflow. I can determine who the most important person is to look at. I can find the slices in their scan that are the most important things to look at, and even recommend, we think it looks like this, you should look right here. If you can do that at scale for 200 studies a day, you're dramatically improving quality of life. That radiologist in the study, a third of them say they take a lot less work home, and they're suffering less burnout, and they're just charged in their balance. That also adds to quality, exactly like you're saying.
I also feel like the data that is input, right? Like there's just more data sets that scans can be compared against, whether it's an MRI, right? Like, do you know what I'm saying? That
we have way more data than anybody can use, but AI can use it.
Right.
And I'll give you an example.
But I mean, when they're comparing scans, right? Yeah. It's something that might be overlooked. Again, not dissing anybody professionally, but when you've got just hard, cold data, that's what they're looking at.
In the study, it'll say roughly half of the physicians that use AI as a buddy or as a check are actually more confident in the ability to make their own diagnosis because of the buddy check. And a quarter of them are saying that it's a significant improvement in the result that they deliver. They're not missing medical issues, they're not misidentifying, and they're not missing things. And that's from the physicians themselves that are saying it's actually helping them have higher quality diagnostic, which if you're dealing with something like cancer potential, this is a big deal.
How do you kind of, I guess, help the physicians who maybe see, an introduction of a new technology as just another thing that they have to deal with on top of their already busy day? Like, do you get pushback from maybe, I'm trying to think of some of those old school doctors who still, do everything by hand. They still have paper notes. They still have all their files, in a paper form. This is a pretty advanced technology to have to implement.
I go back to this triple threat, the fact that there are not enough people to do the work today, and they're burning out the ones that are doing it. And so we actually find in most of the larger health systems, there's a huge appetite to embrace this if we're doing the design along the clinical workflow. The challenge is in the industry typically have thrown technology at people and said digest it, and the workflow has to change. We're not doing that at Philips. We walk alongside our customers. I work with all the largest health systems in the U.S. and Canada, and we're walking alongside them. So when we're designing it, we're having them in mind. The beauty of AI-driven tooling is that it can actually do the work if in the process that they're in. We can adapt to do the work. That's a lot different than deploying software and complex things that you have to learn screens and all that. All that goes away. And that's really the promise. That's not this magic black box thing. That's actually happening today in some of the leading health systems.
So where do you see it all going? Like, what do you, in terms of generative AI, and what role do you see in, like, I don't know, in the next 3 to 5 years? Like, do you have a feel of how dramatic the impact is?
Well, I think...
Or what are you hearing from the doctors that you talk to?
I think it's a journey that will be rightly done with some conservatism. Again, the operational aspects of clinical practice will have dramatic improvement. That's going to give staff back time to be with patients, and you're going to get a better workforce, and you may even draw people into the practice because they actually have these tools that help them be better at what they do, and they continue to have better balance. The sky's the limit, but we want to make sure when it comes to generative AI that we're really thoughtful about not getting over our skis and allowing hallucinations, because trust is the number one thing. If we build trust with clinicians and we do it in the right way, that embrace and that self-check process actually improves the quality of the output. I met with a bunch of CEOs here in New York last night, really, really top-notch institutions, and they're actually telling us in 6 months the quality of the generative AI algorithms that they're building is improving itself at a rate they didn't anticipate. So again, I think do it where there's high trust, build that trust with clinicians, design it around the workflow, and then you'll really get better adoption. And we're seeing that. We're seeing year to year, we're seeing a massive improvement in adoption of tooling that is giving life back to a community that joined the practice to serve other people.
Right.
So it's an exciting time.
Okay, so in maybe 3 to 5 years, is the artificial intelligence actually going to be making clinical decisions, i.e. you can go as a patient into a doctor's office, and instead of actually seeing the doctor, there's not a human involved. Essentially, the AI is giving you the diagnosis and telling you.
I think it would be foolhardy to think about what could be in 3 to 5 years because the rate of innovation is so fast. What I can tell you is we believe, as a technology company, that decisions always land with the physicians. And so we want to augment that physician with as much of the non-value add work and as much of the diagnostic quality they can so that they can make the best decision clinically for their patients. And I can't see how that'll change in the near future.
Jeff, what does it mean for the devices that you guys, whether it's MRIs or CAT scans or sonogram, like the devices, the medical equipment, how does it impact you guys as a company and how you have to think about incorporating AI, or is it kind of pretty easy?
It's interesting. We've made the step to become more of a productivity company than a product company. I mean, it's a pretty big leap in this business. We think the beauty of orchestrating a workflow for healthcare concerns is where we want to be. It's not about the products anymore. And so when we think of like our patient monitoring journey, we're thinking about how do I have a persistent monitoring experience across every aspect of where a patient could be in a healthcare system, even at home. And so we're building these platforms around radiology, around cardiology and cardiovascular intervention, and around patient monitoring from home to hospital to home, where we give hospitals that rich data and that physiological data from patients.
Yeah.
And we think of it as the software layer or the platform that you can start to build these AI algorithms into
like cars,
for specific.
right?
Exactly right. Think about the apps on your iPhone. Oversimplified, but think about apps on your iPhone, right? You plug the apps in that do certain things, but the platform itself. And that's where we've really moved our R&D.
Hey, listen, we'd be remiss. We've only got about a minute and a half left here, but I got to ask you about the macro. You see a lot. Your company obviously is global. You're in charge of the North American unit. How would you describe the business environment and the consumer side of things?
Actually pretty strong for both, at least for Philips. In the consumer segments we're in, we're seeing double-digit growth across the globe, particularly strong here in North America. Consumer demand has actually gone up for us, and we've got a great portfolio in the health system side. Again, we've seen double-digit growth last year. I think we've consistently outpaced the industry for some time. But about the industry itself, we see strong demand because of all the things we've been talking about. We're pivoting to be less about the product and more about productivity, and I think that's going to be a game changer for health systems. That's long-term demand.
How are you guys using AI at your company?
So we're deploying it everything from our financial systems to my commercial operations to contract management, our services portfolio, so that we can deploy agents to look at systems, health systems, products that we have in the field to be able to do automatic determination of like a root cause and a correction path. We're as committed internally to driving productivity and efficiency so that we can grow with our customers at pace.
Yeah, it's kind of fast.
We're all in.
You gotta practice what you preach.
I know.
We gotta eat our own dog food. That's right.
That's exactly. Jeff DiLullo, he is CEO at Philips North America. Thank you so much. Really appreciate it.
Yeah,
we appreciate it. Hey, we're going to continue with AI, and more specifically when it comes to the labor market, the U.S. labor market. Former U.S. Secretary of Commerce Gina Raimondo is going to be with us, so we have some questions to ask her. You're listening and watching Bloomberg Businessweek Daily. Carol Master with Emily Grafeo. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. It has been a day of major swings for the Dow Jones Industrial Average. It is back in the green right now, up 50. That is a gain of 0.1%. Got to keep in mind that at one point we had the Dow Industrials down 1.1%. Was higher as much as 0.9%, but right now looking at the Dow up 57, that is a gain of 0.1%. The S&P, NASDAQ 100 index all remain in the red, with the S&P down 33, down 0.6%. NASDAQ lower by 302 points, drop there of 1.2%. NASDAQ 100 index down 447, a decline of 1.5%. A fresh wave of selling sweeping through global equity markets as an escalation in the Middle East collides with mounting anxiety over tech names. Again, NASDAQ 100 index down 1.5%. The SOX, the Philadelphia Semiconductor Stock Index, down 3.3%. With the VIX now back below 20. A couple of hours ago, we had the VIX above 23. 10-year at 4.52%, with the 2-year 4.12%, and the 30-year 5.01%. Gold is down 1.1%, $42.69 the ounce. West Texas Intermediate crude oil down 3.4%, $88.17 the barrel. Barrel of Brent, $91.45, down by 3%. President Trump says the U.S. must respond after blaming Iran for shooting down an American military helicopter off Oman. His remarks came hours after his claim that an agreement to halt the fighting is close, despite a renewed outbreak of fighting between Israel and Iran. Merger and acquisition news. GSK has agreed to buy Nuvalent for about $10.6 billion, securing an American biotech firm delivering treatments for lung cancer, all part of the British pharmaceutical giant's effort to rebuild its oncology franchise. GSK up today by 1.2%. Shares of Nuvalent, they are surging by 39.2%. I mentioned the selling in chip names with the stocks down 3.4%. Case in point, Marvell Technology down 9.6%. Qualcomm right now trading lower by 7.6%. ARM Holdings is down 7.2%. NVIDIA lower by 1%. And Advanced Micro Devices down now by 5%. SpaceX, the IPO, has drawn more than $250 billion of investor demand. That, according to a report from Reuters. Earnings news. Jelly and coffee maker J.M. Smucker posted fourth quarter profits that beat Wall Street expectations as higher prices helped the packaged food company. Shares are trading higher by 9.5%. All of this on a day when the S&P, NASDAQ, and the NASDAQ 100 index continue to trade lower. Again, the S&P 500 index down now by 41. That is a drop of 0.6%. NASDAQ Composite Index lower by 333 points, down 1.3%. And the Russell 2000 Index has just turned around. It is up by 0.2%. NASDAQ 100 Index down by 1.6%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, Emily and Carol. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massler, Emily Graffeo here at Bloomberg headquarters in New York City. Shares of Alphabet, some outperformance considering a lower trade when it comes to some of those big tech names. The stock was up 2.5%, almost 2.5% at its highs today. Emily, still up about 0.6%. You saw a story by some of our colleagues.
Yeah, so my colleagues Scott Carpenter and Aaron Weinman just published a story about half an hour ago on the partnership essentially between Google and Anthropic, of course, the parent company of Claude. It's a profile I highly recommend. It's all about Google's Backstop that is underpinning a $35 billion chip deal for Anthropic. Carol, I've been reporting this
circular
chip deal
financing.
It is all about the circular financing.
It's kind of wild.
And it's one of the largest private credit deals that we've ever seen. It brings in Apollo, it brings in Blackstone, and it also, this story specifically talks about how it's bringing in Google and Anthropic, and everyone's working together because they need money to buy chips to power AI.
Right, exactly. And if you're one of the big hyperscalers that need those chips to power the data centers and continue the build out of AI, you've got to make sure your suppliers are able to do it, right? And also the processing of the different models. So Google, keep in mind, was one of Anthropic's earliest investors, repeatedly buying equity in the AI firm. And as Emily mentioned, it's increasingly now backstopping the financing that underpins those data centers for the startup. So underscoring that complex business ties among the handful of largest tech companies pouring money into AI. Folks, it's AI's world, and we're just revolving around it. And that brings us to our next guest. Let's get to it with former U.S. Secretary of Commerce Gina Raimondo. She served as the 40th U.S. Secretary of Commerce and 75th Governor of the state of Rhode Island. She joins us from Washington, D.C. Secretary Raimondo, so nice to have you here with Emily and myself. I want to get right to it because I feel like every conversation we talk about artificial intelligence, the build out, the spend, but increasingly about the impact on the labor force globally and here in the United States. You recently responded to a comment on X by Meta Platforms Vice Chairman Dina Powell. She was announcing Meta's launch of a program to provide paid training, certification, and a job for Americans of all backgrounds to be part of building American leadership in the world. Your response, you say many Americans face a catch-22. They need training to get a new higher paying job, but they can't go without pay to attend a training course, and that this initiative aims to solve this problem with paid apprenticeships and credentials that lead to actual available good jobs, I should say. When it comes to AI and the impact on jobs, how do you see it? And is Meta on the right track?
Yeah, well, first of all, good afternoon, and thank you for having me. I am an AI forward person. I think that the U.S. does and needs to continue to lead in this global AI competition. And that means, of course, being ahead with the technology, but it also means having a strategy for people, right? I mean, we're not going to win the global AI race if we have great technology and sky-high unemployment. And so I think it's time for the country to get very serious about changing the way we support people when they change jobs and the way we train people. And the thing that I like about, because we have to bring all Americans along. This cannot just be AI for the big tech and not bring everyone along. And so with this announcement, as I understand, what Meta's doing here, the thing I really liked about it was they're paying people while they do the training. And I know from when I was governor, I was a leader in a lot of these apprenticeship and training programs. People can't afford to do a 6-week or 6-month training program and not get paid, right? They're not going to finish that training program. So to the extent I've heard about this, like you said, I read about it yesterday. I think it's good that companies in America are stepping up to say, let's get innovative and try to support workers. But I think it's important to say, we're going to pay you while you get trained. And if you graduate and if you get your credential, there will be a job at the end of that training.
Secretary, you wrote a guest essay for the New York Times earlier this year. It was entitled, "America Cannot Withstand the Economic Shock That's Coming." What do you think the country, the Trump administration, and lawmakers from both parties really need to do to address this very much feared economic and labor disruption that AI is expected to unleash?
We have to prepare for it. I think it is a transition. I do believe AI will create new jobs. Every technology has created disruption and job loss, but over time, new jobs, new industries, many millions of jobs in our economy today did not exist even, 20, 30 years ago. So I think we're going to get to that place. However, there will be a transition. And I worry that during that transition, if we're not thoughtful and purposeful, too many Americans could be on the losing end of that transition. And so we need to get very serious right now and create new training initiatives like the one we're talking about. But that is not enough. Training is not enough. We need new incentives for companies to redeploy people. We need new, like a new safety net to help people transition from one job to the next. And so I think this calls for some pretty urgent action with the government, with employers. It's an all hands on deck moment to create a people strategy to get us through this transition.
It's a U.S. race. It's a global race. And I think about what China's doing. They made some steps today in terms of being all in, and they do things differently, as we know, in China, Secretary Raimondo. So I'm just curious, if we don't get this right in terms of how we are approaching it and protecting our labor force, but at the same time making sure that we are making the right investments and moves when it comes to AI, when you've got China and the government in their deep pockets, will that put potentially the U.S. at a disadvantage in many ways?
Yes, it will. I've spent as much time as anyone thinking about how to protect America from China and how to compete with China technologically, economically, militarily. And we need to do both. I personally oppose, over-regulating AI or regulating the technology to a point that it would stifle innovation. I want America to lead. However, I also would oppose putting our blinders on and letting AI out into the world without a plan for our workforce. Because truthfully, if we do that, and if we wound up with extremely high unemployment, we won't win the AI race with China. We won't. We will then have political unrest, economic unrest, deep recession, and frankly, a regulatory backlash. So I see no other alternative than to do both, to win on the technology, but to innovate on the workforce models and the transition models and the support models, we can do it. America has consistently risen to the challenge in the face of these big challenges before. And if everybody works together, we can do it again.
You talk about America leading when it comes to AI. That means we need really great leadership. Boston Globe today reporting that you are no longer considering running for president in 2028. What do you want to see from a presidential candidate? And could you possibly reconsider your own ambitions?
I'm smiling because no matter what interview I do, it inevitably gets to that question.
People have said to me they want a leader like you when it comes to
that's very kind. That is, years away, which in politics might as well be decades. Look, since I've been out of government, this is the issue I've been focused on. I am fortunate to have the credibility in the business community. I was the Secretary of Commerce when ChatGPT was released. So I have, great credibility with all the tech leaders. Mm-hmm. I believe in bipartisanship. I work with Republicans and Democrats. So what I'm focused on is how do I work really at the state level where things can happen with governors of both parties, with companies. Listen, it's in no company's interest to have a deep recession and 15% unemployment. So a CEO today has to do two things: implement AI and get in the boat to figure out a people transition. And so that's what I'm devoting my time and attention to, because I think it's what the country needs, and I think I'm well positioned to work on that issue.
We know you have to run. 20 seconds then. What do you think we need, though, in a presidential candidate, considering the AI backdrop and all that's facing us? Real quickly.
A serious person. A serious person who can work with anyone, will work with anyone, go anywhere, do whatever it takes to solve Americans' problems, rebuild a middle class, and revive the American dream, which is work hard, get ahead, including in business.
All right, going to leave it there. The door's always open. We'd love to talk to you further, so come back whenever. Gina Raimondo, 40th U.S. Secretary of Commerce, of course, under President Biden, and the 75th governor of the state of Rhode Island. All right, folks, watching the markets on this Tuesday, we've got stocks off their highs and lows of the session. It's really tech names, though, Emily, where we're seeing certainly another kind of move to the downside in a significant way.
That's right, Carol. Let's take a look at some stocks on the move today. I'm Emily Grafeo in for Tim Stenovic with Carol Masser, and we're joined by Bloomberg Television Markets correspondent Nora Melinda. Nora, let's start with one of the best performers in the S&P 500 today, J.M. Smucker.
On a tear, ticker SJM, heading for its best day since March 2020, back in those pandemic days. This is after reporting a better than expected earnings report, but also announcing plans to lower coffee prices next year. Now, higher prices for coffee and sweet baked goods have actually helped drive sales for this company in the latest quarter. And taking a look at how this company has been performing year to date, the stock is up about 14% so far in 2026.
All right, so interesting to see. But again, it's not a name that we throw out there a lot. But as you said, like a lot of the consumer staples, right?
A lot of the staples, peanut butter, coffee. Mm-hmm. I mean, people need this. Milk bone.
I immediately think of jelly for some reason when I think of Smuckers, but they have so many wide-ranging products.
They do. They have a lot of products, but you're right. They are known for their jelly. Take us to a ticker that I love, SAIL.
Sale Point. So seeing this stock seeing its worst day since March, down as much as 15%. Now this is even after the company beat on revenue estimates. It also raises full year outlook, but the stock is still down more than 20%, down about 24% this year after a powerful rebound that we did see from its April lows. So down double digits on the day, people kind of taking this report in a harsh fashion, really beating down on the company. But to point out again, beating on revenue estimates and raising full year outlook.
All right. And this is about an $8.8 billion market cap company that is, as you said, under pressure, but also down about 23% year to date and about almost 18% of the float short. So a lot of negative sentiment out there.
And a software stock too, right? It's a software name?
Infrastructure software.
Absolutely.
Yeah. All right.
One of the other names getting hammered.
Yeah. Okay. So it's interesting to see that one. Hey, take us to Nuvalent.
Yes.
And what's going on there?
So let's talk a little bit of M&A. Nuvalent, ticker NUVL. So GSK is buying this biotech company for roughly $10.6 billion. Now, this is a basically 40% premium, and this is in hopes to expand its lung cancer portfolio. So as you'd imagine, when we see these M&A transactions happening, Nuvalent hitting its highest level on record today. But the deal also really strengthens GSK's drug line pipeline ahead of some of the upcoming patent expirations for some of its top-selling medicines. When you're looking for news, today's a busy day, but even on a quiet one, I feel like you look to biotech and any of those healthcare names, and you're going to find something going on. So there's some M&A for today.
Yeah, I mean, quite a premium, right?
Right.
For that name. But you do think about all of these big drug companies, and they need to be thinking about their pipeline, where the growth comes in the future, and often they do that through acquisition. All right, good stuff. Really appreciate it. That, of course, is Nora Melinda, Bloomberg TV markets correspondent, joining us here in studio. And be sure to check out our Stock Movers podcast, 5-minute episodes, big winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts. All right, folks, we're looking at a market off our highs and lows of the session, just down about 26 points on the S&P. Dow actually a gain of about 0.2% if you care about that index. Some people do. NASDAQ 100 down more than 400 points, down 1.4%.
Doing a little shrug.
I know.
30 companies.
Poor Dow doesn't get a lot of love. Doesn't get a lot. Sometimes simpler can be very interesting.
Yeah, the Russell 2000, there's a couple more stocks in there. That one's also in the green. Again, what we were talking about, Carol, that economically, or really more like consumer staple trade, that's kind of where equity investors are hiding out today. Jelly, coffee, dog treats.
Right. Stuff that you're probably going to buy, and when you have to make choices, you're going to go there. And then, if you're concerned about some valuations in terms of some of these high flyers, you back off of that. Looking ahead to the next 2 hours on Bloomberg Businessweek Daily, we're going to get to the big take. We're going to think about the SpaceX IPO coming your way on Friday, but how it demands investor trust in Elon Musk's entangled empire. So many moving pieces. There always is when it comes to Elon. So we're going to get into that story. It's also among most read on the Bloomberg.
We're also going to talk about gold, an asset that was on a tear, has taken
multiple years, right?
Right, has taken a little bit of a backseat this year. John McCluskey, CEO of Alamos Gold, talking mining, M&A, and more.
All right, and then we've got someone who's been a bear. He's been on our air before, Tom Thornton. He's president of hedge fund Telemetry. So we're going to see what he has to say about the environment, especially as we've seen some pullbacks in some of those names, in particular semiconductors. Still on a tear this year, but certainly a little bit of a reset. And then we're going to talk venture capital investing, based in Silicon Valley, but thinking about where we might be seeing some opportunities, perhaps in India, perhaps overseas. So looking forward to that. If you're watching on TV, the close is coming your way in just a moment. Emily and I, though, continuing on Bloomberg Businessweek Daily.